I'm delighted to announce that the Market Strength Indicator, or MSI, is now available for both MT4 and MT5 customers. And if you watch the introductory video on the indicator, I drew many parallels with the CSI, the Currency Strength Indicator, which is a sister indicator, if you like, which we developed many years ago for traders in the Forex market, for both in spot and also in terms of currency futures. And many of the principles and ideas behind the Currency Strength Indicator can be ported across and applied to the Market Strength Indicator in the same way. Naturally, as the name implies, it is been developed and designed to show you market strength in a very visual way. And I've created this video deliberately with a very simple application. On the left-hand side is the MSI, the Market Strength Indicator, and on the right-hand side is the equivalent chart. And for this example, I've taken the SPX 500, the S&P 500 index, and we have it on the left. On the left is the MSI, and on the right is the chart itself. Now, in terms of using the MSI from a trading perspective, in a similar way to the CSI, one of the key things that we always want to try and establish, if we can, is major turning points in the price action. The indicator can be used in any time frame, so whether you're a scalping trader or whether you're a longer term swing or trend trader, it doesn't matter. So what the indicator will give you a sense of is when a stock or an index future or an ETF, whatever it may be, or a commodity, has reached a point where it could be considered overbought, and equally where it could be considered oversold. And that's one of the key applications of the Market Strength Indicator. And you use it in exactly the same way as we do with the Currency Strength Indicator, where we're looking for those turning points, those opportunities where we can get into a trend early, because that's what this is all about. Because if you can identify those regions on the chart with confidence, then you will get into that trend at the start, and not, as most trend traders do, get into it once it's under development, which is absolutely fine, no problem with that at all. But of course, you always give up, let's say, a third of the initial, and you might give up a third at the other end when you're getting out. And we take a middle third of any trend that's available. But the ideal, if we can gain that advantage, is to get in at the start, before the trend gets underway. And to do that, we need some help. And that's where the Market Strength Indicator really steps in. It gives you an idea of when the instrument that you're considering is either overbought or oversold. And that's why I kept this very, very simple, to try and give you that perspective, that view, where the indicator it goes well beyond the 70 area, and in this case, well up to 90 before we started to see a reversal, and to the downside equally well below the 30, those two dotted lines that you see, which indicate, they give a rough guide. They're not cast in stone. They are there to give a rough guide as to when that instrument that you're trading or interested in trading is moving potentially to an overbought situation or potentially to an oversold situation. And of course, we never use an indicator in isolation. For us, it's all about using volume price analysis. So on the chart itself, we would have volume. We would be interpreting volume as well. And in addition to that, we would also have this set up in multiple time frames. So in the same way that we'd use a chart in multiple time frames, we'd use the multiple strength indicator in the same way in multiple time frames. And I've got an example of that in a future video. What this also shows is, in the same way that it does with the currency strength indicator, it shows you the strength of the trend. Because the steeper the line that is developing, then the stronger is that trend in that time frame. So in looking at the market strength indicator on its own in this way, we can get an instant perspective on where we are in the journey of that instrument, whether we are strongly overbought, whether we're strongly oversold, whether we're trending strongly higher, whether we're trending strongly lower, or indeed when we're moving sideways, in which case the indicator will move into a congestion phase and will just oscillate within the midpoint, let's say. So there will be no trend. So in a way, you can use this as a radar on the market to look at instruments you're interested in, keep an eye on them, or as we've done here, set it up alongside the chart itself, and it will then give you perspective and help you to pinpoint those points on the chart where we're seeing potentially overbought or oversold situations developing, and therefore the opportunity potentially to jump in at that point. Now, getting into those situations, we have to accept the fact that it may not happen immediately, and therefore in getting into a trend earlier, we have to set our stop loss wider than we would if we were jumping on a trend. In other words, an analogy I've used many times before is you're jumping on a moving train, then the stop loss there would be relatively tight because we have some momentum in the trend and we know what's going on. When we are awaiting something to develop, we have to allow for that oscillation, that congestion phase to develop before the trend takes on the full momentum, and therefore we have to set our stop loss wider in those situations. But everything is risk and reward. If we put more risk on the table, we expect a greater reward, and that's the payoff. We get in early, so we get more of the trend. Someone who is jumping on the trend later, their risk is lower because they're placing a tighter stop loss, but equally they have less of the trend to take advantage of. So I hope you've taken something from this video on the market strength indicator. Fantastic indicator. Use it in multiple time frames. Use it in this very simple way if you wish, looking at overbought and oversold situations, or, as I say, strength of the trend, strongly rising line, strong trend, strongly falling line, strong trend as well, or congestion phases, which will give you a view as to when to stay out of a particular price scenario. So I hope you've enjoyed this video. Lots more to come as always. Thanks for watching. See you soon, and bye for now.